Hey everybody, today in this video, that thumbnail might have gotten you. We said what you can get for 100K in Bend, Oregon. We are actually talking about what you can afford to buy if you have a 100K salary in Bend, Oregon. But you know, we got to do something to make you watch, right? But this is a good video. It's going to talk about $100,000 salary, what you can afford to buy in Bend, Oregon, or in Redmond and Central Oregon in general, and how to get that deal done. We're gonna talk with our good friend and mortgage partner, Garrett Myers over at Elevate Mortgage. We're gonna break it down for you, real simple to understand, how you can get this done, how we can help you get this done, as well as we're gonna show you a couple of houses that this would currently work on in today's market. We're gonna get after that video right now. All right, guys, as I promised, we're here with Garrett Myers from Elevate Mortgage, and he's going to break down the financial of buying a house if you have a $100,000 salary in Bend, Oregon, or even in the Central Oregon area. So, Garrett, you want to introduce yourself?
Been on a couple times. If you recognize me, name's Garrett Myers. I'm a local mortgage broker here at Elevate Mortgage here in Bend, Oregon.
Awesome. Garrett and I don't know how many deals we do last year, Garrett, like 13 or 14?
Yeah,
Yeah.
probably 10 to 15 deals together last year.
Yeah, so we have a good working relationship with each other, and we have yet to fail to get a deal done. So, you know, any scenario, no income, big income, you know, you need a down payment assistance, we got the thing. So here, let's talk about okay, so $600,000. Now we know $600,000 in Bend, Oregon is a tough price point to find, but there are houses available, right? Northeast, southeast, there's quite a few places. So if we were to find a buyer that had a $100,000 salary, you know, and what kind of payment structure can we break down them based off, you know, what the average person owes and stuff like that. So if you could kind of walk us through how we would structure that deal to get it done, that's what we're here to talk about.
Sure. Yeah, definitely. Let's break it down. You know, $100,000 a year salary is $83.33 a month in gross income. The biggest thing that lenders look at, and really the thing that most people are qualifying for on a mortgage, is called debt to income ratio. You can talk about credit all day. You can talk about income. You can talk about debts. You can talk about purchase prices and loan amounts and payments. But really, it's all revolving after a minimum credit score on your debt to income ratio. On a conventional loan, the maximum debt to income ratio that you can qualify for off of with good credit is about 49% of your gross income. So let's just say 49% DTI on a $100,000 salary is about $4,083 a month for all of your debts. That's your new mortgage and maybe your car payment, your credit cards, your student loans, any other personal loans, anything that would pop up on a credit report. So if you've got, let's just say, you know, you've got 4,000 now to qualify for off of, and you've got a couple $100 in a car payment, some student loans, and some, you know, you pay off your credit cards every month in full. So very minimal debt, healthy for a $100,000 salary. You would likely qualify for a payment of about $3,200 to $3,300 a month, which would put you around $600,000 in purchase price with a 5.99% rate. If we were able to get a buy down from the seller, get some seller credit to buy that rate down to 5.99 today with today's market, be about 6.4% APR. Be looking at about a payment of about $32.85 a month in Bend, Oregon, and that would include your mortgage insurance, your taxes, your insurance at 20% down in down payment. Total cash to close is probably about 125 to 130 out of pocket.
Oh, hey, by the way, my name's Joshua Grossman. I'm the leader of the Lifestyle and Bend team at eXp Realty. We get calls, texts, emails, and Zoom requests every day from people like you, and you looking to make their move to Central Oregon, and we absolutely love it. My partner Theron and I are standing by to answer any questions that you might have, so leave a comment below, send us a text message, sign up for an email, or give us a call. Pick up that phone, give us a ring, and we will jump to work on making your move to Bend as smooth as possible. It doesn't matter if it's 9 days or 900 days, we're here to help, so give us a call. So let's talk about that. Let's break that down a little bit. So for people that don't know, what is a buy down, right? So a buy down is when we ask the seller to contribute dollars towards your interest rate, right? So what is the par interest rate right now? Like what's it actually at? Like 7.25%?
Today is February 14th, 2025. The average rate today in the country is 6.99 at about 1 point cost.
Okay.
So 1 point is 1% of your loan amount. For this scenario, a $600,000 house with 20% down, you know, the loan amount's $480,000. So 1 point cost, 1% buy down would be $4,800. That's how you're getting the average rate of 6.875 to 6.99 today in today's market. So if we want to get lower, if we want to get that lower, if we want to get that down to 5.99, instead of paying 1 point out of pocket, we can ask the seller to provide, I don't know, $20,000 in seller credit back towards your closing costs to buy that rate down to 5.99, reduce your monthly payment by probably over $300 a month.
And what's cool about that right now, guys, is like, this is a market, right? There's enough houses for sale right now. The interest rates are just in the right point where a lot of sellers still need to sell, and we're getting some great credits. We closed a deal in January. The purchase price was $899,000, and we negotiated seller credits and everything to bring their rate down reasonable. We got them a huge amount. I mean, all in, I think we got about $60,000 off of that house that we closed. We'll show you a picture of what that house looked like, but like, those deals are available. You just got to work with somebody that knows how to get them, right? And not everybody knows how to get them as well as Garrett and I do, and that's what we kind of made our bread and butter over the last year. Like, even when it was a seller's market, we're still getting seller credits. You're selling a little house in Prineville right now. We got 3% seller credit. We just asked for it. There was no negotiation. We said, this is our offer, take it or leave it. And they said, okay. And oh, by the way, the seller paid 100% of my commission. So my buyers are truly coming out of pocket with fees and stuff like that at very little, because we're going to use the money the seller gave us, and the seller's going to pay commission too. So it's going to keep your down payment, and your out-of-pocket costs as low as possible. That's something to consider, right? This is with a 20% down payment, right? So 20%, $600,000 house. You can do the math. What's the down payment on? That's what, 30 grand, right?
$600,000 house with 20% down?
Did I do that math right?
No, you're way off.
That's why you're here, Garrett, 'cause I'm a real estate broker and you're the finance guy.
Got 120,000.
All right, so we need 120 grand down, right? That's a lot of money. We totally get it, but you're making an investment, right? And
Where'd that money come from, though, Josh?
I mean, gosh, that money can come from your 401k if you have one. Like, a lot of people are taking 401k loans out. A lot of people are cycling up. There's a lot of different ways to get that $120,000. But the cool thing about putting that much money down is you don't have PMI, right? Like, so you're not going to have purchase money. You're not to basically pay a fee. So the bank
No mortgage insurance.
Right.
No mortgage insurance, so no extra monthly. And 100% on a conventional loan, 100% of your down payment. So that 120 grand, that can come as a gift from a direct family member, whether that's mom and dad, grandma and grandpa. Grandma and grandpa, if that's money that could possibly be inherited one day, a lot of times people will, go ahead and gift that earlier if you just got married or having kids and you're trying to buy a house. And grandma and grandpa, that could also, if you talk to a CPA, grandma and grandpa could start using that gift exemption to start moving money to the family before they pass along, to be able to help with that down payment. So 100% of your down payment can come from a gift funds as long as they're from a direct family member. And I see that a lot.
We've also got three free gifts for you. The first one is an absolutely free relocation guide. We put all the comments below, the link to it. You just gotta click on that, and we'll send that baby right out. It's chock full of all the best information around Bend, best places to go, just the general vibe of Bend, just like a ton of information. So grab that reload guide. And then if you want to buy a house, right? Like, we have a free buyer's guide set in there too. And the buyer's guide goes over everything, including on how your real estate agent is now going to get paid. So that's super important. And then number 3 is a seller's guide. We know that a lot of people moving here might need to sell something somewhere else, or even here in Central Oregon, and we can help that too. We can help on anywhere in the United States, right? So selling a house is pretty much the same as far as just the general guidelines, and the seller's guide will help you possibly save you a ton of money. So our free gift to you for watching this video, go ahead and jump into the comments below, look for the section and click on it, grab that guide, and let's get back into this video. And we have a lot of people that are selling elsewhere to come here, right? Like, if you're selling in Southern California, if you're selling in Seattle, Washington, if you're selling in Austin, Texas, any of these hot places where people are like, hey, we don't want to live here anymore, we want to come to Oregon, right? Like, those house prices there typically have a lot of equity built right into them too. So there's lots of different ways to get that. We would love to have a conversation with you about, like, hey, let's talk about how we get it. Maybe we can't come up with 20%, right? Maybe we can come up with 10. Maybe we can come up with 5. Maybe, as low as 3.5% for an FHA loan. Now, obviously, your ratios are going to be a little different. We might have to buy a little bit less expensive house. Maybe it's in Redmond versus Bend, But the long story short is right now in this interest rate environment where they're still a little high, sellers are willing to negotiate, right? And so Garrett, give us a breakdown on the math. Like say if we bought a house right now at 600,000, we negotiated a buy down and we got the interest rate to that 599, right? And interest rates don't ever drop, or maybe they do, right? Maybe they do in 2 years, they drop down to 5.5% or whatever it happens to be. But we bought a house at 600,000 because that same house at 600,000 is likely going to be 650 or 700,000 if interest rates are in the fives again, right? So like break that math down for the folks, because I don't think everybody truly understands that volume of purchase versus interest rate, because this is a payment scenario over 30 years is what you're playing with.
Yeah, absolutely. Your interest rate, a lower rate will have a larger effect on payment than a change in purchase price or loan amount, right? When we're talking about this payment for somebody who makes $100K a year with 20% down at $600,000 purchase price, we're getting there on that monthly payment with a certain loan amount. So it's not necessarily about purchase price, like you're saying, it's about loan amount, right? So 100K in Bend with a salary, you're probably qualifying for anywhere from a $460,000 to $480,000 loan amount, right? So if you want a $600,000 purchase, you got to bring in $1 for every dollar over that 460 to 480 loan amount your income can qualify for, right? Now, how can we qualify for a higher loan amount with not higher income? Well, we need the payment to drop, okay? So for every $10,000 that you put down in down payment, or $10,000 that you negotiate in a lower purchase price from a seller, not seller credit, lower purchase price, only changes your monthly payment by probably $50 to $60 a month right now. 10 grand, $60 a month, okay? So if we're talking about buying down a rate from 6.99 to 5.99, and it's gonna cost anywhere from $16,000 to $18,000 right now to get that. And we asked the seller, hey, we want 20 grand in seller credit. If you were to take that $600,000 purchase price and change the price to 580 instead of $20,000 in seller credit at 600, right? That 20 grand is probably gonna only drop your monthly payment by 100 to 120 bucks a month in payment. But if you buy the interest rate down by 1% on $480,000 loan amount, your monthly payment's gonna change more like $300 a month. So that would really be equivalent to probably a $40,000 to $45,000 price reduction for a $15,000 to $20,000 seller credit.
I mean, it's not, that's awesome because like, getting 50 grand off a house, that doesn't happen a lot, man. Like people know how to price houses nowadays and we're not in this crazy market. Like it's not going to sell. Like it just simply wouldn't get any offers, right? You might find something that's on the market for 300 days and then maybe be able to get that, but it's pretty unlikely. Getting a seller credit on anything right now is pretty good. 1 to 3% is pretty normal. Like I wouldn't even bat an eye. If you're one of my sellers and we get an offer that's 3%, a 3% seller credit, but full price, like I'm going to tell you, hey, we're going to break it down. This is a good deal for you guys. And it's actually something that we should act on. And most sellers are of that same mind right now because they want to sell, they want to move to Florida or wherever they want to move to, right? And so this seller credit is something that doesn't get as much attention, I think, as it should. And if you hire a team that knows how to negotiate, that's key, right? Like you can't just say, okay, they're not going to take it, right? Like you've got to know how to negotiate a deal to get that done. And for 22 years now, I've been negotiating these deals through all different types of market. And you hear a lot of realtors say what their background is. You know what my background's in? Sales and negotiation, right? That's what I do well. And that's why we've been so successful for so long. So, we would love to have a longer conversation with you because this is a deep conversation. We got to go through financials and your income and how long you worked and if you're self-employed, et cetera, et cetera. But we're going to put a link down in the comments below. For all of Garrett's information, you can reach out to him directly. You can reach out to me directly. I can connect you with Garrett, or you can leave a comment. We answer all of our comments on our channel every time we get them, and we want to hear from you. So tell us what you think. Did you think, hey, I make 100 grand a year, but I can't buy a house, right? Like we have proven people wrong time and time again. That we can absolutely buy a house on $100,000 a year. We just got to find the right deal. Now, you're not going to live in Northwest Crossing or Aubrey Butte. You're probably going to live in Northeast or Southeast Bend or maybe Redmond, maybe Pineville. There's some cool spots in the Pine. Oregon Water Wonderland. I have a house right now. It's $580,000 on a half acre in Oregon Water Wonderland, right? It's a nice 1,400 square foot house, brand new paint, awesome oak wood floors, 580 grand. So we could do that scenario for
for $100,000. So Garrett, hey man, thanks for jumping on. We absolutely appreciate it. We're gonna push this out to everybody and see if we can educate some people on how to use their money effectively to get that American dream and buy a house. For now, we're gonna jump in now to a little bit of tour of some of these houses you can buy. So we're gonna show you the one in Northern Wonderland. We're gonna show you one we just sold, just some different options, right? So you have a visual on like what you could afford for that money. So, all right, let's jump into that part of the video.
All right, so in closing, do you make $100,000 a year? Do you want to buy a house in and around Bend, Oregon? Do you have questions about how to do that? That's why we made this video, because we get a lot of people that tell us, hey, I just don't think I can afford that price point. Well, we're here to tell you, you probably can afford that price point, and we can probably get you a house here. Now, you know, it might not be easy. You might have to have a down payment, but like we're here to support you and give you options to get all that kind of stuff done. So, not gonna be free, not gonna be easy, but we'll make it as easy as humanly possible and help you achieve that American dream of owning a house here in beautiful Bend, Oregon. We appreciate everyone tuning in the channel, and if you haven't subscribed yet, it helps a lot if you do, and tap that bell for notifications, and we'll keep updating you as things change. Until we get that next text, phone call, or Zoom request, we'll talk to everyone soon.